Friday, December 17th, market analysis, Stan Ehrlich. Good morning, and we have a very interesting morning and market conditions developing. Remember, Monday is going to be a stock market holiday, although some or a lot of the commodities are open, various early or late openings and closings. Check with your local brokerage company to see what hours are available. If you're commodity oriented, but stocks are closed on Monday. So I'm probably not going to have a YouTube on Monday. I'll restart the YouTube series on Tuesday next week. Now, that means the stock market has a 3-day weekend. That means a lot of people don't like to stay in positions over a 3-day weekend. Whether they're making money, they take profits, and whether if they have losses and they're getting worse, they take losses and get out. So maybe on the next trading day, they won't be even worse. That's the psychology, which does not necessarily work out to be the correct psychology. But anyway, just want to point that out. 3-day weekend for stock people. Martin Luther King Monday, of course. Now, we have a major upside breakout in stock market indexes for the most part. This is a bear trend line that has been broken today on a closing probably basis. We're almost high and last. We're up 7 points, which is pretty chunky. And you have to realize that the market has gone from an oversold condition at 58.08 approximately just on the 13th of January, Monday, the low. Tuesday was up. Wednesday was up big. Yesterday was a little bit lower, a point or two, mixed, not much down. But the point is it wasn't up big time, but it wasn't down big time either. Just a little bit of a dip. And I talked about deserves a correction. I talked about I wasn't quite sure how much of a dip down it might have. And it could at any time, because you're not overbought or even close to overbought, run right through resistance, which it did this morning. We now have a new high and a likely, well, we have a new high for a couple of weeks. And we have a likely new high for like 3 weeks. And we have a close likely above the previous bear trend line. And all of this boils down to a breakout of the downward slanting channel or wedge, or you could say downward slanting pennant. They're basically all related. So, bullish, period. All we have to do is stay around the middle of today's range or higher to have that breakout, which seems very likely. Also, the other indexes you'll see are coming along just great at the same time. Important. Now, the 1-minute chart on the E-mini. Come on. Will show 5-minute chart on the E-mini will show you high and last almost exactly right now. And very close to important previous highs. The last important one was January 6th, 5th, January 5th. Actually happened in the nighttime or the early morning hours of January 6th, but whatever. And that is going to be super close to all of the important last remaining tops we have seen in the indexes overall, including, of course, the E-mini. Spider, same thing. We're just right at the first important rally high, which was January 6th. Then we have a high, not much higher, on December, going backward in time, December 26th, day after Christmas. And finally, we have the highest high for this long-term, multi-year bull market that happened just December 9th, only about 5-6 weeks ago. So, this bull market has gotten new strength, new breakouts, new buy signals, and if it stays here or even a little bit lower than here, stays in the middle of the upper range of the day, I'll be extremely happy and satisfied. There are a couple of problems, but not much. We have two gaps to close under the S&P 500 and the NASDAQ. Well, only one under the QQQ, but you'll see in a minute. This is a fairly large gap. Now, is this a breakaway gap? And breakaway gaps are not as often closed when gaps historically are almost always closed. So you should expect it to be closed. But maybe this is a breakaway gap. I can't tell. They're very difficult to tell which one is which at the moment or the days that they happened. Later on, you can claim because it's after the fact you got 20/20 hindsight. That doesn't help much about telling the future. So I cannot rule out the possibility of the spider coming back to 585, which will pretty likely pull everything else down with it, but it won't change the longer term picture. This gap today looks very likely to get closed because it's jumping across the trend line. It is closer and closer to getting overbought. We don't need too much more strength. And it won't be too far away down below where the market is trading. Like this gap is quite a bit of ways down now already. Been 3 days. So closing today's gap looks a lot more likely. So keeping that in mind, I'm looking for a test of historic highs. I'm looking for a test of all-time tops. And we have 2 weeks basically to go. And I think it's going to happen within the next 2 weeks. And then January will be an up month. Actually, January started, when did it start? December 20. Oh gosh, I guess we're already up quite a bit for the month. Yeah, I didn't realize that. The close on January 2nd was way down here. Oh, that's good news. Okay. I was only concerned about it for a few days ago. So this is way into profitable trade from the beginning of December. And again, the historical commentary is the way January goes. I meant January. The way January goes, the year goes. I didn't do any research on my own, like the Santa Claus rally and the October lows on this particular phenomena, if you want to call it that. But I think there's some credibility to it. I've been listening to this kind of stuff for decades. So I like it. And technically, I love it. So I'm happy here. Now let's go to the spider 5-minute chart, just showing you plain detail. We're coming up to a little resistance. I think we're going to have the momentum. And I like the way this is acting and the way this thing looks. Good. Next, QQQ. The low today in the QQQ is slightly below the high of yesterday. There is no gap. It's very, very close, almost exact. I think it's 6 ticks, something like that. So no gap. It is breaking the major bear trend line. It is not overbought. All the other comments I can make about the QQQ apply to what I just said about the SPY, except for the secondary gap on the spider. So I'm liking this a lot. We got 3 levels to watch closely: 527.75, 531.20, and right around the top, I'm going to just say 537 approximately, the top of the market. They represent, to one extent or another, little resistance levels. Some are more important than others. And it depends very much on whether you're overbought or not when you get there. So if we get there right away, we probably will be overbought, and that's the first one at 527.28. Okay, bullish, bounced off support, doing great, long-term trend intact, don't have a problem with this, not expecting any major corrections, looking for new historical highs pretty much across the damn board. Maybe down the Russell. Next, QQQ, 5-minute, nothing else to say. Next, NASDAQ, no gaps, futures contract. It is breaking the major bear trend line. It is not overbought. It is doing great like the other indexes I've mentioned, and pretty much all the other comments apply. You just have to watch these 3 other important highs since the early part of December. Next, just a 5-minute chart on the NASDAQ QQQ. I'm sorry, yeah. You could say that. The NASDAQ futures, NQ. Now, the YM Dow is making a new high for about a whole month plus. and it looks like it's going to stay there. There is no particular bear trend line that looks to be as important as the one we have already crossed today on the other indexes I just talked about. But it did get oversold. It did turn around, and we're doing great. I like what I see. I think we're building some great longer term momentum, but bull moves have small downside corrections relatively frequently. And that's what I catch often, as well as I hope the big moves with my ER buy signals. So that's the Dow. Love it. Looks good. No problems. Higher. Up we go. New historic highs, maybe before the end of the month. This is simply the 5-minute chart on the YM. Now let's go to the Russell. It has problems at 2309. Let's call it an even 2310. That's close to today's highs. It's trading only around the middle of the range instead of near the highs like the other indexes. Its resistance level is super profound and lots of historical evidence that it should, could, and is so far having trouble in the ballpark of 2310 to, I don't know, maybe 2335 to 40-ish. But then if it can clear that, it has in the past gone all the way up to 2500. So we're stuck at the moment until we can get a little more strength and then break out to the upside inside the yellow resistance zone. We already got oversold. We already bottomed out because of the support level, and it's turned up great faster than I would have guessed it 5 days ago. But it's doing okay. Not as many good signals and pieces of evidence as the other indexes. And this is simply the 5-minute chart on the Russell. Now let's go to bonds. As you know, I had an ER signal, a buy signal, turn green on January 14th. I told you at the time that it was happening, real time, because at that time, it was on Tuesday of this week, fluttering around unchanged, up a tick, down a tick, net higher, 0, 0, up, down 1, down, up 1, turning green, turning back to yellow or white, turning green again, turning back to yellow or white. So it was flirting with a good signal, which was a good signal on the close. We bought the low of the day to the tick, which was 110.30 the next morning on January 15th because of our ER signals, ER3 entry process. You can't get better than buying the low of the day, whether it's a scalp for the day or a position trade after that, period. It did make approximately, I think it was exactly 1.5 points for the scalping trade. And that's the green dotted line inside of the 1-day scalp trade on January 15th, last Wednesday. Little bit of a dip, no harm done, nothing hit, no stops hit for ER3 overnight, which is the green trade line that you see from the low of Wednesday to the current quote. We're still in the trade. And it's doing very, very well, about a little over $2,000. Our stop is way too low at the moment. I should change that. And I will, to protect a profit of some sort, probably up into the ballpark of a 111.5. And all I got to do is change the kicker to speed it up a little bit. And then I'm going to feel a lot better about that stop doing the job the way it should. Next, notes didn't have a buy signal at the bottom. Close, but no cigar. And rallied like crazy on Wednesday and came up a little bit more yesterday and is at the moment right smack at exactly unchanged, but it's coming along okay. I'm very fond of both the bond, double bottom, and I'll go back to bonds for a second here. Where am I? There we are. Remember, for months now, I've been talking about interest rate futures having some sort of major long-term bottom. I thought it was going to be a head and shoulder bottom. That didn't pan out. It did actually for about 3 weeks. Bottomed out a little later than I thought, which is October. It bottomed out in November. It bottomed from 115.5 to 120.5. 5 full points. Took it about 3 weeks. But it failed, made new lows, took too much time, went down too far, Head and Shoulders canceled out, removed all the annotations for this pattern. Now we have a broad, not the greatest, double bottom. Both lows have ER buy signals. Green, bullish engulfing on the bottom day, exactly October 23rd, 23. And so far, on the low day, just a few days ago, January 14th of this year, of course. Now, obviously, not much time has passed, and I can't look back 6 to 9 months and tell you that this market has now moved up to 120, 130, 140. And that's exactly what I'm forecasting long term. In the next 6, 9 months to a year, I'm expecting this thing to be up into the high 120s and very possibly into the 130s. The longer term upside objective is approximately 150. Back to notes. Its double bottom is even better. The low we just made is a lower low by a very small amount relative to the low again on October 23rd of 23. So this double bottom looks like a double bottom. The lows are very, very, very close over a long period of time. So all the other comments I made, just different numbers involved, apply. I think it's 125 or 128 is my upside objective. I don't remember, and I've erased all those other lines. So I'll get to that in a while if things continue to get stronger. Okay, crude, heat, unleaded. And I got a new signal today in copper, by the way, brand new, you'll see. Crude oil got overbought Wednesday, got up to resistance, turned down a little bit yesterday in a doji, closing a little bit lower. And today, another doji, so far a little bit lower net change. So starting to slide. Where's it going to come down to? Good shot back down to the trend line, support 74.64. In a day or two, is going to change slightly lower, not much. Or a little support inside the old pennant formation. That wouldn't be bad, 73. So a little bit of a dip and then up more. Next, heating oil, essentially the same thing. Up against resistance, overbought conditions. I'm looking for a correction back to test the old top of a downward sliding channel or, a downward sliding channel, or maybe a little bit lower into support, into the channel, and then up more. Like what I see, but a little top heavy. Next, natural gas, same thing. Major resistance. Now we've got 3 little highs to deal with, actually kind of 4. And today is a substantial down day. Too bad. If we had gotten 1 tick or more above yesterday's high, we would have a gigantic red bearish engulfing ER sell signal. Nah, didn't happen. That one worked great. That one worked very, very nicely. Some of these buy signals work great. That one worked good. That one worked good. That one worked for a few days, and that was unbelievably good. It's low for months and months before and low since November 4th. Okay, now downside dip of a little bit more. Again, maybe back to the head and shoulder neckline, which is working very, very, very nicely in natural gas so far. And I might have to add that the high a few days ago was awfully close to my minimum upside objective, which I've been talking about, a 4.464 if you want to get close to exact. There's no sense in getting close to exact with technical analysis usually because markets hardly ever go exactly where they're supposed to. If they get within, say, 99, 98% of what they're supposed to do, that's good enough. And they might go a lot further than they're supposed to, which is great. So support at today's low, but we're there. And then we're probably going to slip back, I don't know, halfway of the rally. That would be around 3.7 something, and maybe back to the neckline. Probably not back to the neckline. The neckline was tested accurately as hell on January 3rd when it had broken out a few days earlier, got overbought, got to resistance, came back to the neckline almost to the tick, almost, and started to work its way higher. Now, that's unfortunate. We did have a legitimate sell signal. It just didn't work. So we got stopped out at the worst with a small loss, probably small losses. I might add that there was a possibility of a profit on the day trade scalps. You cannot see the day trade scalps inside a daily data chart because they would be simply vertical and they're hidden inside the body usually. They don't have the right kind of markers on them to be exposed. You have to change to a 1 minute or 5 minute or some short-term minute chart in order to see the trades when they're scalp trades. Now, I like what I see, but little top heavy. Next, gold, silver, platinum, copper, beans, oil, meal, corn, wheat, and then that stock, which is doing good last time I looked. We're a new high ground for the second day above a bear trend line. Lately, there's been a lot of bear trend lines and a lot of pennants or channels. This is also a bullish breakout in gold, a new group, precious metals. Nevertheless, some similarities to other charts, whatever they are. So, new high, minor resistance at previous highs, right at today's high and yesterday's high. Time for a little pullback? Probably. Look how close it got to overbought officially. It got up, and my overbought, remember, is 75, not 70 like Wells Wilder used to use in his original RSI. Mine is a customized version of Wells's original RSI. I learned RSI directly from Wells Wilder himself in the late 70s, 80s, and yeah, probably that'll do. And stochastics from George Lane himself and Bollinger Bands from John Bollinger and so on, being one of the lecturers for 20, 25 years worldwide in the CompuTrack series and TradeStation series of seminars. There were 3 of them and a whole bunch of other companies. So, little bit of a dip probably here about to start, but you can't see it because we're about unchanged down 2. I don't care if it goes up to new highs. That'll be okay. But we're probably not too far away from some sort of a dip. Next, some sort of a dip in silver has already started. We touched from underneath the bear trend line. Didn't go over it this particular chart. I should probably put a parallel. I haven't done that yet, and I'll do that exactly now. Across the bottoms, let's go with this kind of a line, and I'll tilt it a little bit, and I'll grab it back here. And I want, yeah, this is going to work okay. Let's go off that low, and I won't touch that low, but I'll raise it so it touches the low a month ago. That one. It's not going to change things too much. Either we have a downward slanting channel or a very elongated wedge. One way or the other, that line looks reasonably good. I'm sure it's seen better. So the resistance line at the top has stopped the rally. Yesterday's high, not overbought yet, pulling back because of the line. Maybe we're going to come back to 30.20, possibly a little lower. I still like this long term, but silver just needs a little goose up here in order to get above that line, in order to have another series of days up into resistance and probably get up to 33.5 and higher. Platinum, a little bit of a different animal. We almost have a bullish engulfing today. It would not have turned green because we weren't oversold. I like the way it's acting, but I got no signal and I got nothing more than a big support area that it's come out of, rallied up, retraced a bit, and I think this is going to continue to work its way up. I can't say too much more about it than that. Obviously, you're going to have a little trouble around 1,000, a hair under, but right around there. Next, copper's got the red bearish engulfing ER sell signal today, brand new. All it has to do is continue to stay below yesterday's close, which looks extremely likely. My blue marker, it's the close of the day. The reason I have these markers is because I changed the color of the candlesticks completely to either yellow or white instead of the usual red and blue, green, because I don't care about anything that's not a red signal or a green signal for the actual buy and sell signals with ER signals. But I do like to see whether it's overbought or oversold, which is yellow, because yellow is a warning, just like in a traffic light. In the United States, if you see yellow, it means it's going from green to red, and you better hit the brakes somewhere quickly, or that traffic light camera is going to get you. So I like to see whether it's coming into overbought, oversold. And finally, of course, the red or green actual factual signals with my system. That's a sell signal. Now, in the next 3 days, it may come back up into approximately the middle of today. And I'm assuming that today's range is maybe set. It may not be. It could make new lows. If it makes new highs, all bets are off. It will not be a sell signal by the end of the day. It needs to stay below the previous day's close to stay red, which I'm 99% sure it will. There's always a slim chance. So I'm bearish on copper starting today. Soybeans pulled back to the old trend line, bounced off it yesterday around the close, and is starting to work its way right back up. This is slowly but surely looking bullish and more bullish and more bullish over the days and weeks and months. So I'm saying I think beans are going to make a new high here above 1064 within a week or two. And if it can start closing above 1083, I'm going to be squawking about a long-term bottom having happened, and it's going to be a long-term double bottom. The first lows are August, and the second low is mid-December. Something like bonds and notes. I like what I see. I'm bullish, looking for a test of 1080 and higher. Soybean oil, essentially the same thing. There's room for a downside correction to support, no particular gaps to close. I think it's going to hold on a little bit more of a dip and start to make new highs again. You have to deal with the resistance area again on the way up again, but it probably won't be overbought by the time it gets there because it didn't go down that much in the meantime. So I'm liking what I'm seeing and a little bit lower, maybe 44.16, maybe 42.70. Somewhere in that area, it'll hold and turn into new high ground on the rally. But then if you start crossing above 49, let's call it 50, you will be approaching the neckline on a large head and shoulder bottom. Shoulder low, 5.624. Head of the formation, 8.1624. And the last shoulder low, I think that was a slightly lower low, 12.26. Let's call it December of last month. Already well on its way up. A little too fast, a little too quick. Going to back up a little. Then touch the neckline, break the neckline, and you're supposed to go up to 61 1/3 or more over time if this head and shoulder bottom works out completely. Meal, not quite the same. Coming down close to a broad triple bottom, huge major support area. So I'm thinking it could turn around at any point. I think I used those words exactly yesterday, and we're up almost $4. So that's not bad. We're not above yesterday's high. We're not above the high of the last week or so. That would make me happier. But it is up. It's a doji, no reversal, no oversold, only support, but it's up. Let's see if it can keep going up. I'd like that very much, and I think that's what's going to happen. Corn has done very nicely and is well on its way to fulfilling past tense, almost there, the upside objective on a head and shoulder bottom that I've outlined for you guys every single damn day for months. False breakout for a couple of days, threw a little monkey wrench into things, and that was December 10, 11. Pulled back, but managed not to do any major damage. Only a little bit of a false start. Then we started closing again, obviously above the neckline on December 24th, and that was it. Never got back down to the neckline, never closed below the neckline, and made new highs, backed up a little, made new highs again only about a week ago, has been making new highs damn near every day since, now is overbought for a few days. It may not be able to reach the minimum upside objective of 494 before it corrects down. It may correct down a little bit and then finally get to 494. But I believe 494 is coming up around the corner and more. This could be a long-term bottom in corn. That head and shoulder bottom. You get up to 494 and you're not far away from the highest highs since January of all of last year. If you can get above 5, let's call it 515, you will be making new highs for over a year and have a bullish formation in the bottom of it and cross a bunch of other important resistance levels, as well as bear trend lines and a whole mess of signals past tense. That's not my job to tell you what it looked like and now it worked. My job is to tell you what was going to happen before it happens. Next, wheat's the laggard of the group, along with meal, sort of. We could develop into a double bottom. I'm looking for that. Today's low is lower than yesterday, lower than the day before that, lower than the day before that. Not by a lot, chewing its way down. It's not the lowest low for the trend, but it's not far away. If we turn around and start to head higher, closings above 555 is going to start to throw a very good looking possible double bottom into the question mark. If that's true, then the upside objective, if the breakout takes place and everything works properly, could be as high as around 740. We're trading at 539. Call it 540. That's big. Big. Let's see what happens over time. And cattle. Topped out, overbought, came up again, couldn't make new highs, slipped off. Yesterday was the big down day. Today it's resting a little bit, about unchanged, up a few ticks. Doji, no higher high, no lower low. I'm waiting for lower lows. The trend is up. I'm bullish on cattle. Where are we going to get an opportunity to buy it? I hope 194.15-ish. Looks pretty reasonable. And I'm not ruling out a dip down to 191 and maybe a little under that, like 189, upper 189s. That one, okay, Miss Piggy, came up to some resistance, and this is another head and shoulder, but it's a head and shoulder top. It's working very nicely. First shoulder high, November 1. Next shoulder high, the highest high always, November 27. Last shoulder high, December 23. And the neckline across the lows after the first shoulder, but before the highest high, the head, and the lowest low after the head, but before the last shoulder high. So the line slants upward slightly. Classic. When you break the line, it's a big down day on higher volume. It's got to be higher volume. I don't even look at volume very much. And classic. Follow through to the downside. Got oversold. Classic. Got to the bottom almost of a support area. Turned around and came back up to the neckline. Classic. And now in the last 3 days, starting to make lower lows again. Classic. What's going to happen? Next few days come down to 78.42. Then down to my minimum downside objective of 75.75. And lower, maybe. These are all minimum objectives. I can't rule out coming all the way down to 68 or something. Last one, ladies and gentlemen, and then we'll check on the indexes real quick. The stock is trading at 88.02. The symbol is SQ. I don't know what they do. I don't care what they do. A good friend of mine clued me into this, and I liked what I saw about 2 months ago. This is a gigantic 2-year bottom. I talked about the head and shoulder. I talked about the big trading range. I talked about the pattern working correctly, which it did before I started analyzing it day by day. I talked about the downside correction to support. It just finished this week and now up almost every day since the downside correction, bottoming out. And I'm pretty sure I mentioned one of these price. Yeah, this price at 80.40-ish, because it's at the bottom of the support and resistance zone. It's a support zone. It was trading above it. So it came down to support. Now it's above it again. Great evidence that the bull trend is in force. The bull market is probably still intact. And I am looking for a lot higher on this. How much is up on this thing? I think I erased my objectives, but it's substantial. I'm thinking real quick. It's probably in the area of one. Oh, there's the line. Yeah, 134. Now that is also a very modest. If you take a look at more historical data, say 10 years worth, you'll see a few years ago, not just two, you were trading at 170, 80, 90, 200. So this could come all the way back up to the very high 100s, 180, 190, and then who knows? And back to the E-mini. It's right there. It's high and last almost. It's not stopping so far. It did make a minor new high while I'm yakking away here. You guys have a great 3-day weekend. In some cases, not everybody's got Monday off. But have a great weekend. And of course, profitable trading to you.